Alright then guys, what's going on? So, this is the second time I've actually recorded this video. Literally just recorded it, but it turns out I was recording the wrong monitor. But obviously you don't care because you came to watch a video about my dividends and my investment portfolio, so I'm just going to go straight to that. The 13th of March, we received the Incomeshares Tesla options dividend, which was £200. It was the lowest dividend actually that this ETP has delivered so far. And that is obviously because Tesla dropped so much recently. So when I originally bought this ETP, I knew that Tesla wouldn't really go up in the short term much more than what it did after the Trump pump, because it was already wildly overpriced. But obviously it's not like a guaranteed assumption I made. It's things can be overpriced and still go up anyway, but I was correct in saying that, but I also didn't expect it to drop so viciously. But it is what it is. It's part of the game, and volatility is what gives the higher premiums for the weekly contracts, which will then in return give you a higher dividend. But in my eyes, the only risky part of owning an ETP like this is the time when you actually first invested to the point where you actually receive your initial investment back. Because once you start receiving dividends after you've received your initial investment, then it's basically house money. It's free money. Obviously there's not free money, but you know what I mean. You get the gist of it. And obviously you can just keep putting them back in as well. So because it's gone down so much, I'm obviously just going to put the dividends back in and try and average down. I'm not going to put any more of my own money in. It's just going to be the dividends. So I'm not actually too bothered about it being down, because the dividends is the main key takeaway from this. So, but yeah, obviously we was going to hold it for years, and we're still going to. So nothing's really changed. Microstrategy hasn't really done too much. I think it's down probably like 27% since its high in November. But it still remains volatile. It did kind of slow down a little bit, but then they started levering up again with convertible bonds, and now they've dropped new preferred stock. So it's definitely interesting, and I think Bitcoin is basically the cost of capital from now on. I think it'd be hard to find something over a long period of time that beats the return of Bitcoin. So that's why I'm so long MicroStrategy. I have a small position in Semler, which I could increase my sizing on, because Semler is actually more leveraged than MicroStrategy. So if you think about the market cap, Semler owns more Bitcoin as a percentage of their market cap than MicroStrategy does. So that means Semler's leveraged more than MicroStrategy. So the more Bitcoin goes up, the more Semler's going to go up. So it just depends what you want at the end of the day. But yeah, this is my quick update. I know I was a couple of days late on it. I've been busy and everything and that. I like this little feature that Train 212's added in, which is the net deposits. So I can see how much I've deposited, but I can also just derive that from the profit I've made. So yeah, that's it guys. If you've watched it this far, then thank you. And yeah, subscribe if you want to see my future portfolio updates. Maybe they'll be a lot better than this one, and my account would have doubled by next month, but I can only pray. Or maybe that next month my account is negative 50%, but that's what we do. I think taking no risk is the bigger risk. And yeah, so adios.